Hey traders, it's Forex Aura, your guide in the vast landscape of financial possibilities. Today we are delving into the exciting realms of boom and crash markets with a spotlight on the platform that unlocks these opportunities, which is Derive. Buckle up, fellow traders. Hit the like button and subscribe to the channel, and join me as we unravel the mysteries and potential profits in these dynamic markets. Envision this: the boom market soaring to the new highs, and then the crash markets taking a nosedive. It's the roller coaster of the financial world. I'm your captain through the twists and turns. Stick with me because at the end of this journey, you, fellow traders, will not only grasp the dynamics but also uncover the strategies to ride these waves for potential gains. Get ready for an insightful ride. Let's dive in till the end of the video to be focusing more on the introduction of these boom and crash markets and how they look like, how they move, and where you can actually find them. Stay tuned till the end of the video. Let us begin with the name of the broker. The broker's name is called Derive. What is Derive? Derive is an online trading platform that offers a variety of financial instruments, not only the boom and crash markets. It provides traders with an opportunity to speculate on the price movements of these markets, allowing for potential profit gains. We don't really have news events in these markets. These markets are volatile and we don't know the push factors. Okay, here we go, guys. This is the Derive. I've logged in a demo account so I can illustrate what I want to, so I can illustrate what the booms and crashes are. So as you can see, the broker here, Derive, we have a red D if I'm not mistaken. So you can see that the broker has different types of indices. Let me just zoom in a bit. Yeah, it has volatility index, 10 index, volatility 100 index. There's a lot you can actually trade in this market. And the good thing about these markets is that they go 24/7. There's no day off, right? They keep on going 24/7. So they are good markets if you like trading a lot. So yeah, aside, we won't be looking at these volatilities. We will be looking at the booms. We want the booms and crashes. We want the booms and crashes. Let me remove a few of them. Yeah, even step index. So as you can see, we have a boom 1000 index, crash 1000 index, boom 500, crash 500. It's only 6 indices, right? So I'm going to start to explain the booms. As you see on the booms, we have the market going down. This is the 1 minute time frame, by the way. We have the market going down, going down. It always goes down, but there are these large candlesticks we cannot predict. Remember the message I said, right? When there are these candlesticks that cannot be predicted, these ones, or should I say, they are hard to predict, right? They give more money as well, right? They give money according to the distance they travel. Right. But you can also wait for one of these candlesticks to spike, then you ride with them going down. You understand? But we are not on the strategy. This is only an introduction to the market. So you see, this is how the booms move. Let me zoom out so you can see. This is how they move. You see, here they were trending downwards. It was trending downwards. The boom 1K went up, spiked, went down, spiked, went down. You understand? This is how they move on the lower time frame, but on the higher time frames, they look almost normal. Let me go to the 15 minutes. Not normal yet. Yeah, they look almost normal. You can be trading them with a break of market structure, but there was no retracement there. You understand? So yes, these are the boom, or this is the boom 1K. Let me go to at least crush 1K. Here's one crush 1K on the 1 hour time frame, but let me go lower. See, okay, there was a gap here. Yeah, the crash 1K does this. It goes up by the minute. Goes up by the minute, just like this. Goes up, up. up every minute. But then there are these candlesticks which are unpredictable. They spiked down. We call these spikes. They spiked way down. Pa, pa here, and then boom here, then started the rally up. You understand? Yeah. So these are the markets that I will be giving you hints and strategies in order for you to catch these long spikes. Because people wait for these spikes to occur, then they would buy here. See, some use indicators, but I don't use indicators, and I am able to predict where the next spike will occur. I know high probabilities areas. I know high probability areas that the spike is going to occur. So yeah, let me explain a little bit more about the booms and crashes. As you can see, these two, the 300s, are currently the largest amongst the 6 indexes. They are currently the largest. They give more money, or they require more money for in order for you to trade them. But unlike the 500s and 1K, if you have like at least $10, you can be able to trade them. You can be able to trade them, and the broker allows a minimum deposit of $5 upwards, depending on the deposit methods that you are going to be using. So, if you are finding this information insightful, please don't forget to subscribe to the channel and like the video. Share to other people who are interested in trading the derived markets, because there's more content coming your way. I think this is enough of an introduction. Let's close the video. And if I missed anything or I said something wrong, please don't mind to comment in the comment section and let me know.